Hey, everyone. What is
Hello.
up? Hello,
How are
hello.
you, Red?
I'm great. I'm great. Well, not so good looking at the markets, lah, but uh, could have been better. Could have been better. But yeah, I feel good because of the conversations we have in, you know, our how do we hedge our portfolios and how do we position ourselves to sort of cushion ourselves. Yeah, so that one I'm doing great. But other than that, obviously, majority of the portfolios are. It's a tough time. But then again, we're excited, right? We're excited today, guys, because we're actually going to be talking about, uh, the trades that we are making in Bursa, the potential trades that we think are great for value in US. So we're gonna chop it all because I know you guys love Bursa, right? So yeah, you guys know the drill. We have Academy. I'm Warren Howe. This is Shafiq.
Shafiq.
Shafiq, we run Academy and we empower you, we empower people to trade stocks, trade and invest stocks so that we can grow our net worth, obviously through stocks. And we do it with portfolio management. We have a YouTube channel, so do follow us there and subscribe because we'll be more active there. So yeah, let's get to it. Let's talk about the immediate, issue at hand, right? And
By the
when
way,
I
Warren,
Yeah.
your mic like too far.
Oh, I think I. Sorry, guys. No wonder.
Can
No
you?
wonder. Sorry. Can you hear me better now?
Ah, yeah. Better.
Oh my gosh. I changed my thing. No wonder. Sorry, guys.
All right.
Yeah. So we are. Sorry, we have Academy. We empower you. We empower each other. More and how. And today we're gonna talk about something exciting because we're gonna be sharing our Bursa trades and hopefully some US trades as well because we know you guys love Bursa. Um, but there's some like
Bursa.
really screaming buys right now, and the question I want to ask is like, shit, are we stupid or what? Are we crazy? So yeah, we're gonna talk about that later, right? Very exciting stuff. So let's talk about the issue at hand, right? And I feel very sorry for what's happening when I really look into the photos. Like I didn't want to. We were very busy, okay, busy in terms of like our own YouTube, busy updating our portfolios, busy talking to our members and all that, right? The usual stuff. I didn't really look into what is really happening in Ukraine. We already know it's bad stuff, right? What happened today was the nuclear plant like got shot up and got fired and all that caught fire. But when we really look into the photos and whatnot, so let me share my screen for a little bit. Um, so so this is it. You can see, right, Fig?
Yeah.
Yeah. So that's how bad it is. Like these were actually photos from inside the Russian invasion. This is how bad it is, man. Look at the buildings. Buildings, whole fucking crazy. This is crazy. Missile on the street, training to fight back. Toy. I thought this was actually a human being, but okay, it's a toy. But fighting a fire, past the ammunition. People are hiding underground, inside the supermarket, in the tank, barricade. Wars are not fun, man. Check this out. Like lonely toy. Okay, we're burning.
Toll of War, uh, Launcher, Violence at Home, Ready to Fight, Where Else, Tearful Goodbye. All of these guys like Taking Shelter, Fallen Soldier. This is crazy. Like, damn, man. When I look at this, I really feel sorry. But so, so I almost feel. I mean, we have to protect ourselves. We have to protect the downside. Wars are not good. Wars are not good for our portfolios. Then I'm thinking, I mean, we still have to do something lah. In terms of like, I feel bad because we are actually leveraging off this war, and actually, so far not so great profits yet. But it's testament that uh, we have to build solid trades and plays lah. But when looking at this, it's like, damn, it's really bad, right? And it begs the question that when you look at this, a few questions come into mind. My first question is, how long is Putin's gonna, continue this shit? And we never know, right? But things are looking bad. We've got attack on TV tower. Like, Russia really wants to take over the whole thing, dude. But I think, and there was an article that just popped out on Bloomberg. They said that they might have underestimated Ukraine. So then again, we got the Western. The Western is like they're anti-Russia, right? They're helping, Ukraine, and we never know what is fake news, right? So don't trust the news too much. But obviously, we can't deny this lah. But what I'm trying to say is that we can take an educated guess and say, okay, how long will this war last, right? How long will this war last? Is shit gonna get bad? And immediately when there's like a halt or some flow, some signs of like stopping, the whole market is going to go back up, obviously, right? So it's going to be a sharp decline, sharp up. But yeah, so that's the first question. Logically, when will this stop? We never know. But what we do know is if our portfolio management allows it, and if we are the type of investor, I literally I had like two clients that I was talking to today, and because I do coaching, right? And I was like calming them down. They were like really freaking out. They were freaking out. They were down to like 30% of their portfolios. So I streamlined and I looked through literally every single one of their stocks and what's the holdings, what is the game plan, because I know some of them. What is the game plan overall? And so people are freaking out. But if your cash allows it and your monthly cash flow is good, then it indicates something that relates to fundamentally, are the companies affected, right? So if they are in US, it's self-reliant, then inflation is one thing, but will the earnings get really affected and impacted? And what is the guidance, that your companies give and all that? And if the market sentiment your cash flow allows it, your market sentiment is going down, it may present opportunities. And we can see that in tech, which we'll be talking about later. So that's another question that we have to ask ourselves, right? Logically. So there's two questions so far: how long, and the third thing, which we're going to talk about more, is what are the potential plays that we can actually hedge on to, right? So let's talk about the bad stuff. The problem here. The problem is the war, obviously, and the problem is Fig. You were saying also like inflation fears, like recession fears, right? So
they basically relate the surge in oil price to 1970s crash.
Yeah. So it's like, now is already at 2014 levels, right? Where's US oil? Yeah, US oil is here. The Brent is already at 10. US oil is already 110. Brent is already at 112. So every dollar increase will be, higher gasoline prices by 50 cents. Every increase in 20 bucks. And it's already at $4 already per, gas prices. So if that raises up, and, obviously it will be affecting consumers, consumer spending, will that spark a recession going in? So all these flares all jumbled up together, right? Which with the majority of inflation and all that. Is it a very smart move to be piling on more into tech, especially when the tech have forward PEs of like 40 or 50 or 30? Is it a smart move where we got other deals in the market? This is a question that we have to ask ourselves. Or are there potential, other trades that we can actually hedge on and take advantage? Because, and there's one bottom line that every investor slash trader should think about. And the bottom line is, where are the earnings going to go? Market cycles actually react from earnings, right? We got the energy sector lagging 2 years ago, where oil prices was at 12, 15, 30, 40, rising up. So that's where they were negative, right? 2020, for example, Devon, it's a upstream player, or Hibiscus, whatever. Yeah, you can see their profits actually raking in more this year, right? So what I'm trying to say is, bottom line, we track down the earnings, we track down the momentum, and that's where we don't fight the trend, right? So that's what I'm trying to say. And the other problem is, like, growth stocks is dragging down lower, right? Growth, we all know this. We've been dragging out. Fintech's been dragging out like 60-70% from the highs. Stable companies like PayPal with free cash flow positive, free net income positive, lower guidance. Obviously, that's why the stocks are going down. Their PE ratios are like 30, dropping from 50 or 60. Now it's at 30. So, the question also is that, is it cheap right now, right? We got so many deals. But the problem is, growth stocks are still continuing to go down from inflation. What is a possible trade, right? So did I address the problems enough, Fig? Like, is that all? The problem is, right? The problem is growth stocks. Problem is oil going up. Like, analysts got all going up like $130. Now it's at 112. I didn't believe it would go to 90. The war accelerated it, obviously. Okay. So that's where we fucked up. Right now you can argue that energy stocks might be too high. But what do we do in Bursa right now, right? And we got the war going on. So, Fig, maybe you can lead the way from index. Let me just stop sharing. But what do you think, man? Like, these are problems. So what do we do?
Yeah. So one thing that we need to remember, right? What happened globally, especially in a big macro scale like this, right, is basically will affect Malaysia as well, right? Increase in oil price, the war, obviously, if it escalated further and further, longer and longer, right? Yeah, I mean, we need to remember that although we're not Malaysia, not really, not really related to all of this, but still, right? We somehow affected by the global sentiment. Okay, so talking about Bursa Malaysia, right? Bursa Malaysia. To be honest, I think this year Bursa Malaysia quite volatile, right? Not really attractive. A lot of counter. The price movement is not really attractive. Even though of course there's a few time to time, right, potential, but at the end of the day, right, if you are more serious into looking for a more suitable conservative approach, especially in difficult time, right, actually it's quite difficult to trade during this time. Okay, but at the end of the day, as a full-time trader, right, as full-time investor as we are, and also maybe for you guys that active in the stock market, you need to trade and make money, right? So it goes back to the classic theory, right? So when something go up, eventually it will go down, right? Something go down, eventually it go up. So there's a cycle in the market, and this cycle is basically what we are seeing in the market today, right? So that's why when we have our first 2022 live, right, we mentioned few potential sector that we really we think are positive. One of it is energy. What is the other? Commodity play, right?
Commodities.
Yeah, I think that is still intact. I think that is still in the play, especially in the time like this, right? So today, basically, we want to talk more about that. We want to explain why this is probably the time, and I will try to show you guys basically what is our thesis, how our mind, how we develop our thesis to say that, all right, this is the potential sector that we should looking for next, right? And also
Yep.
what is what happened in Malaysia, lah, right? Basically, like what happened in Malaysia, a lot of commodity play, a lot of building materials or industrial product, all of this kind of sector, somehow it quite lagging, right? Somehow it quite lagging. Only few counter that really surging out in the first 3 months, right? But the first 2 months, right? But overall it's quite slow. But I believe the commodity play, the energy play, all this, right, will run through, lah, right? But we do mention that energy play, we believe that energy could achieve 140 maybe end of year, but but it's already 120 just in February, just in March. So I think they're going to be like exhaustion, lah, right, in energy run out. But at the end of the day, this is basically our focus, right? And a good thing for Malaysia as well, because we are all producer, right? So when all of this happened, somehow we still not that negatively affect, right? Although we have a lot of politician issue, right? I mean politics issue, YMDB, all this that drag everything down, but still during difficult time like this, we are still lucky because we are all producer, right? So yeah, that's my comment first, right? So let's look at. By the way, you can see my screen or not?
Not yet.
Not yet. Okay.
By the way, guys, if you wanna, yeah, we do. Sorry. By the way, guys, if you want to know more, I mean, you continue watching, share it with your friends, share with your family. We are going to reveal sort of what our opinion, like, and please, we are not financial advisors. This is our opinion. We're full-time traders. We're full-time investors. We think that our money flow ourselves. We're managing money, our own money, and the public portfolio. This is where, in our opinion, the flow will go. So appreciate if you guys are here. Drop a hi, drop a hashtag live, drop a hashtag replay if you're watching on replay, and yeah, see you there. So Bear, hey, Lee, VL. We'll get to your question later, but let's Shafiq share something first. Thanks, guys.
All right. So first thing first, let's look at KLCI, and this is comment based purely on technical, right? Later maybe Warren will add something on fundamental if there's any. So if you look at KLCI, past month the price of our KLCI have gone up, but basically, right, if you look at the overall market, which is like I mentioned many times before, a combination of a mask, flashing, and east, our market is actually quite stagnant, and in fact, recently, past week, there's a sell down, right? So why there's a difference between these two index, right? Because FBM KLCI, inside this FBM KLCI, there's a lot of financial company, right? There's a lot of banking sector or not. So because of interest rate hike and all these things, so eventually banking get the repercussion come to banking in Malaysia, right? So this is normal, right? But again, if you look at the market in overall, it is downtrend, right? It is downtrend. So what we want to see is market to stabilize again, right? Probably break the downtrend and at least do a slow momentum uptrend, right? Slow momentum uptrend like slow momentum uptrend like this also good enough, right? But at the moment, our KLCI or not basically our Bursa is still in a dangerous situation, right? Okay. But having said that, right, there's always a cycle. There's always sector that will strive in the cycle. So we stick back to what we mentioned, which is commodity play, maybe energy, and also banking, right? Financials, right? So today we want to talk about steel play. We want to talk about industrial product, which is steel and metal, which is maybe the cement, all of this, right? Because this is the commodity which the price hike up because of the situation that happened in the global. So somehow this is like a hedging tools lah, right? So even though it's difficult time to make money, but there's always potential for us to make money, right? Right. So before I go further, I want to show something which is this is aluminum price, right? So aluminum price as of today. So as of this evening, right? So if you see the price actually already break the previous high. Is currently at the highest in 1 year, right? It's trending upward, right? So next we look at steel, right? Steel also doing the same. And why this happened? This is because, like we mentioned previously, when if Russian and Ukraine war escalated, the potential beneficiary could be energy and also steel player, aluminum and whatnot, right? So it did escalated, and that's why we see the price jump up, right? And if we look at a lot of energy and steel counter in US, right? In Nasdaq, there's a lot of, I mean, the sector over there is already trading up, right? I think the price already go up, already trending up for 1 month already, right? But if you look at Malaysia, our energy is still, it is positive, but it's still quite stagnant, right? For example, if we look at energy index, okay, so this is energy index. Yeah, right. There's an individual counter that you can make money lah, because remember, this is more like hedging the position, speculating all this, right? First thing first, you need to know that not all counter is attractive for institutional to hedge their position. So it's very selective. Probably only few company that they want to put their hands on, right? So that's why our energy have been quite stagnant, quite slow like this. If you compare to US market, right, their energy already like a rooftop already.
So that's why I'm laughing, because if you go to XLE, you'll see the uptrend, like
this one.
Yeah, energy sector.
Yeah. See, so that's funny thing, because in Malaysia everything is lagging, and I believe this is also because of the recent foreigner fund outflow, right? So that's why market has been quite quite slow, especially this year, right? And not just energy. If you look at building material, which is industrial product. But industrial product, I think better lah. It's industrial product. Where is it? Yeah, this one. Okay, our industrial product is uptrend, because this is following up from last year, where there's a commodities really, steel price really, all these things. So always there. But for energy, somehow people afraid to put their money on energy. And I have members and friends that they say that, okay, I will trade energy, but short term, right? So basically, energy is not attractive.
Same.
Right? So I guess that's why last time when we talked about energy, we were like, energy. So and that is basically reflect the real sentiment of everyone, right? Probably that energy is a good hedge at the moment, but they afraid to. They don't think that it is a good time to just buy and hold, right, in the sector. So that's number one lah, right? And number two, if you look at industrial product, the trend have been uptrend, but this is lagging, right? If you compare to what happened to US, right, they already break the previous resistance for a month already, for almost a month already. So my point is, right, this is my thesis lah. My thesis is basically Malaysia is lagging, right? If we don't want to touch much on energy sector, it's okay. Today we just talk about industrial product. We talk about steel, metal, commodity, and whatnot. So that's why if you look at my point is, my thesis is like, all these things already really up a lot, but in Malaysia we still lagging. So probably there is still potential upside for us to make money, right? Do you agree with that, Oren? What do you think?
I agree. Right? I agree.
Yeah.
Today we're going to talk about Bursa, and there's always a laggard. Like, for example, PMB.
Yep.
PMB Tech, let me give an example, because they are highly reliant on the silicon metal prices. But you can see when we can see a comparison of similar companies doing the same, silicon metal upstream. You can actually see the laggard from PMB Tech value to to the other peers. So when silicon metal prices go up, if US is highly reflective of it, because US alone is already now is at 4,003 USD per ton. The maximum went to 10,000 and went high. But my point is this laggard is real. You got steel prices or steel companies in different parts of the world. Even steel, and this was actually reflective of Hyaptech also. Hyaptech and a couple of steel players, Andrew. The steel prices went up. The thesis was that I think it only took 2 weeks, then only got reflected. So this stock price laggard is actually quite powerful tool that, if we can, so end of the day, trade is a trade. We have to set cut, if the market is really volatile, then we just set tight cut loss law, right? But if it's still a thesis, we still go. I agree with you. I agree.
Yeah. So that's why plantation also commodity, right? CPO price.
Oh yeah.
So,
yeah.
But again, there's a laggard, and there's a laggard which maybe we can take advantage of. So we're going to talk about industrial product, right? Commodity play and all these things, right? But looking at the index itself, right? And today everything go down, right? But if you look at index, actually yesterday it tried to test. Yesterday it tested the resistance to break a new high. So we call this cheat, right? We call this is potential breakout from previous high. So just by looking at the price action, there's a potential there. But again, market is quite slow. The market is planning all of this play into the sentiment in the market, right? So that's why our stand in this is basically this is a potential play, but again we still quite conservative, right? Not super conservative, but quite conservative lah, right? Don't hantam all in all these things, right? So be reasonable in making position and whatnot. So that is our standing and our point of view. So let's talk about individual potential counter, right? So
let's do it.
When we talk about steel, for example, just now we look at steel price. Okay, so if you look at steel, I think, and you guys need to understand that steel have upstream, downstream, and midstream, right? So I think the most the most company that will benefit towards the high steel price is basically upstream player, right? So upstream player, company like Enju, company like Hyaptech, company like SS Steel, company like L Steel, all of this, I think is the potential beneficiary, and they could lead the rally, right? So let's look at Enju first. Right. Okay. So see, our Enju is still not moving much, right? It's still there. While stock our steel price already the steel price already go up a lot. So if we could see a potential rebound from here, right, that eventually form a higher low. So I think this is the potential upside that we can take advantage of, right? So that is the reason, that is the thesis basically, right? So that's Enju, and I think Enju is one of the best steel company right?
Yep.
They have quite a strong fundamental or not. Then let's look at Hiab Tech next.
Hiab Tech will be the dodgy one,
Yeah, Hiab Tech is more like speculative counter. Not speculative counter retailer counter right? Yeah. So Hiab Tech, we can see that the price already almost close to the previous low. So this is previous low, and we can use this as our support to see is there any potential rebound. Okay. So same to Enju just now. There's no rebound signal yet, right? Especially because last 2 days market have been quite in the sell down, but it is actually probably a good time for us to make our position and right from the low, right? So this is buy on dip strategy. Basically, if the price drop toward the support, and if we see the support is strong enough to push the price back up, right, I think we can buy on dip on this counter. Okay, but again, Hiab Tech normally is the laggard one. So if Enju is laggard compared to US, right, Hiab Tech probably more laggard, right? So yeah, just need to be careful, right? Again, we positive with the potential. We positive with the potential upside that this sector might that this potential sector can give us, but we need to be conservative because the signal is not there yet. The signal is not clear yet. So basically, we need to see the setup building up, and that's a confirmation for us to write it. Okay, right. But again, if we positive with the what happened, we can write this counter lah. Okay, next. Another option is SS Steel. Southern Steel. All right. So if you look at Southern Steel, this is basically probably potential rounding bottom, right? And normally in the rounding bottom, there's a 3-stage, which is downtrend, sideways, and uptrend. Okay. So from now, what we already see in the current price is the price volatility steadily contracting, right? Although this is not VCP because the low is not higher than previous low, but still this is a pattern. This is a triangle pattern. This is sign of accumulation setup that we probably can see a potential uptrend, right? So again, you need to break the resistance. You need to break the trend resistance, and after you break that resistance, you need to create a higher low. So after you create higher low, only then we can say comfortably that the trend is changing. Okay, so but again, this is quite tricky counter to say that it can break the previous resistance, because imagine if the price break out and create a lower high, right? There's a few resistance over here that you need to break up. So depending on how long is the steel rally is, and how long is how long the steel rally is in the global, because what happened is still all of this, right? There's a supply disruption, right? So we want to see how long it is so that it will be normalized. But if just let's say tomorrow suddenly Putin said stop, right? We will stop the war, and everything go back to normal. Maybe it takes 1 week to normalize everything back. So there's always uncertainty like that. But again, to hedge our position in this difficult time, um, in this time, right? So we need to write whatever the beneficiary of the current event, right? So that's why we propose this kind of thing, right? So this is SL Steel. I think the setup here quite interesting. You can see recently there's a few candle with strong volume, okay, but this is basically not enough, right? For the counter to show a strong breakout, normally the volume will be slowing down a little bit, right? Because this is called supply test. For a supply test to how to say, for a supply test to happen, for a supply test to successfully happen, right? Basically, in need an equilibrium number of three. It's not equilibrium number. You need to have a low number of seller. Okay, so when there's a low volume, meaning that there's no seller to push the price, right? There's no seller to to ask for the price as much, right? So when we see the potential like that, when we see setup like that, we probably can anticipate that the supply test is successful, right? Or probably might successful. From there, you can see a signal for entry. We can see a breakout and whatnot. Okay. So again, for now, this is the resistance that we need to see. We need to watch closely, right? Next, another upstream is Lion Industry.
Lion.
Right. Okay, same story, but this one already show like slightly trending sideways. So basically this is okay. If this is our trend range, basically the current price is at the lower range of the trend, right? My point is this is basically quite safe entry position lah. Okay, so again, support by the catalyst of what happened in the steel price. Yeah, we might build a position here if there's a signal of reversal, right? There's a signal of rebound from the support, right? Okay. Next, we look at Steel. Okay. So Steel also showing a kind of resistance toward the support, right? This is obviously still downtrend, but there's a building up for recoveries. Okay, so same story, right? Same story. Basically, my point is like if you look at every upstream steel player, the price is still lagging, and they trade at a safe entry point. They trade at very low risk position, right? Which is if we're positive, we can build our position in. But if we want to be more careful, we need to wait for a proper signal, right? So that's why I said that our point of view, we want to be quite conservative. So my point of view, I want to see a proper signal first, not just simply buy. Okay, so I want to see how the market react, what happened in the world, because the war is something that it can happen anytime, it can also stop anytime. So we want to see the sentiment react first, right? Without sentiment reaction, we might we cannot simply build our position in safely, right? unless that is a speculative trade. And last upstream player that in my book is Elstin.
Well, going through nearly all the steel players, huh?
Yeah, all upstream.
Yeah, all upstream.
Yeah, but again, every company, every counter showing the same kind of setup. They in downtrend, but they slowly in recovery position that might potentially reverse, right? Might reverse the trend. So yeah, that's basically what we can see within all of these counters. Okay, right. So another commodities that we just looked just now, right, is aluminum, right? So aluminum, if you look at here, you have Alcom, right? Alcom is still lagging, but it's showing rebound already, right? And I think if we see the Fibonacci, it reversed from 618. So yeah, this is good. This is basically good guidance for us, lah, right? For each resistance here, we can anticipate an entry and an exit, right? So you choose your weapon, whether you want to short-term trade, you want to intraday, or you want to swing or not. But the building up is there, so take advantage. But be careful with the sentiment. That's my story, right? That's basically what we try to share here, right? Next is Bellum. So Bellum, if you look at Bellum, the price already hiked up, right? This is hiked up yesterday. And in fact, right, I'm actually looking at Bellum because, we anticipate this play. But we look at Bellum yesterday, but we quite busy during that time, so the price already surged up. So, but it's okay. Now you want to see the price to go back to the average. We want to see the price to return back to the mean for us to find a comfortable entry. Okay. So, but now it a statement that aluminum, steel, of this, there's a potential play, right? We can see from the build up that is slowly. We can see from the price that is slowly building up, but just that there's no push from the market, right? So we need that trigger. If there's a push for that trigger, the reversal or trigger the rebound, that's when we take an action, right? But yeah, Bellum already moved lah. So maybe because the name is LB Aluminium, right? So aluminum go out, buy aluminum, buy Bellum, right? Okay, next is Bambi Tech. Bambi Tech is also commodity play. They have, I think, only small part in their business aluminum, right? But
Yep.
They are mostly on silicon metal, right, Warren?
Yep, that's right.
Yeah. So again, silicon metal, all this still is actually a good is the commodity play that we can hedge on. So now the price already go up a lot. Now it's stabilized a little bit. So yeah, just wait for the building out, right? Now everything is still in the building up setup, right? There's no like a direct entry for us to make. There's no direct signal for us to make entry yet, right? Unless you are intraday or short term, right? Which you look at smaller time frame, probably, right? But in a bigger time frame, in a normal daily time frame, there's no setup that we can take advantage yet. But as long as PNB Tech maintain above 70.99, right, 18 ringgit, I think that is considered safe entry, right? And in fact, they are giving out dividend or they're giving out bonus issue. I forgot.
Bonus.
Bonus. Yeah.
Yep.
They give ordinary share, right?
Yeah. But I'm obviously I'm not personally hunting for that lah. I'm hunting actually for their staying on as a longer term shareholder. So this was the stock, by the way, guys. Just to repeat again, what that as a what play was that again? You were saying the it's a technical term.
Capital?
We released this. Wyckoff. We released
Oh,
this
I call. Yeah.
live. We released this doing a video and YouTube. Yeah, so this was tied with TA and FA. But the reason why we're actually staying on, so silicon metal prices actually dropped down and normalized. And now in US price is already at 4,005 per ton. China is also the same, 3,000 or 4,003, 3,004. So what I'm trying to say is that they had a blowout earning, similar to Tesla and a lot of other companies. Right, Q4 is like the highest of the high. So if we see that momentum picking up, which it is, like the numbers are crazy. Latest earnings 107 mil profit. Even if we were to not give them growth and assuming maybe 80 to 90% utilization rate, we are expecting already like 500 plus after tax profit after tax profits. So if you work out valuations, which what we do in fundamentals, you will find out that it's like what, below 10. So assessing the management, Kuhn Brothers, which is a subsidiary of P Metal, assessing the high demand for, because this is a very important component in the supply chain of EV, essentially. EV, which is the big demand, and the supply side will be depending on whether or not China, because China silicon prices is very unlikely that China will get from PMB, because there's a lot of supply there. But if, let's say, companies are moving more to the clean energy ESG initiatives, that's where they will have a better demand, because they have clean energy. They're getting that from Sarawak. So my point is, we follow earnings, we follow momentum, and the momentum is just crazy as per the latest earnings. So other than now, everything is all cushioned by the first thing that we said just now. The first thing that we said just now is, okay, this Russia war, and PMB is not that case, sorry, because even in inflation environment, PMB is going to be benefiting. So the first question is, when will this war last? When will the inflation stop? If we foresee, because in the beginning of the year we already saw there'll be tons of headwinds moving forward in 2022. So if that is the case, then obviously tech will go down and other cycles will go up. And this is exactly what's happening. But if we think that inflation is not transitory, if we think that inflation is here to stay and all prices are still going up and all these things that we said, that is like the cushion for us to shift our fund flow and go here. And we still think that it's going to happen. That's why PMB Tech, that's why those steel plays. And the thesis, I agree with the thesis, Vic. Like aluminum prices going up suddenly, steel prices going up suddenly. It's not only the case of Russia war. It's actually the case of, supply shortage overall, right? So it's like a double protection in a way that this thesis will actually play out. So the only question now is, okay, if we open up KLC Screener, if we open up Tech, we open up Andrew, will the earnings momentum still continue to grow because they are beneficiary of steel prices going up upstream, right? So, yeah, the question is that when the stock price is reflective of earnings growth, we see that in PMB Tech. We are probably going to see that honestly, I don't really like steel players, but I can't choose. I mean, beggars can't choose now already. We have to pick the play, pick the thesis, go on it, and fucking ride it. And if we set a tight cut loss, if you don't want it, right? So all I'm trying to say is, the thesis is cushioned by these reasons. We can test if this is not within your competence. But yeah, these are the potential plays that we're looking at. It's quite valid, in a way. But again, guys, it's not a buy call. It's not a sell call. We're analyzing things together today. So yeah, that's what I think. Fig has shared his technical side. I'm sharing sort of my fundamental side. As long as earnings will make sense, let's open PMB for a little bit.
Open.
Yeah, can you see my screen?
Oh, I need to stop share. Okay.
Can you see it now?
Yep.
See how crazy that is? Like 107 mil, like see how crazy? 5x of the last quarter. So the question is, will silicon metal prices stabilize to this level? And if I open up this, and by the way, these are from Bloomberg Terminal, okay? So these are live prices. If we look at US silicon metal USD per pound, this already indicates there's 4,000 plus per ton. China is really 3,000 plus, but they're not really getting from China, so we can't really look at that price. We got 3,008 euros per metric ton, which is 4,003. So we can safely say that the price is within that level. And that's number one, okay? It's cushioned by these normalized rates, right? The second thing is, and that's where we will have to work out the average selling price, ASPs. The second thing is we have to really award the management's method of collecting money. So the revenues actually increased like mad, okay? It increased 170 mil. But the receivables are only, not mistaken, I forgot, is that 30, 40 M? That means they are able to collect shit, no? The things that they're able to collect is strong, right? They can collect money fast. So that is testament that this, obviously Kuhn Brothers is, 50 mil. So this testament that the management is solid, okay? That's number two. The number three is operating margin. Operating margin because of ASP, upstream players, as we know, the CAPEX remains, OPEX remains, but ASP similar to the glove story, right? Their profits are like free, So this is exactly the case. Operating margins are close to 48% right now. And that's been increasing quarter over quarter, not year over year, quarter over quarter. So if we see that earnings momentum, right, pick up, the question is, will stabilize? When will it stabilize? Is it a glove story? I don't think so. It's totally not for gloves. There's no vaccines for, steel commodity price. So the tricky thing about commodities, though, is that, okay, if the price fucks up, then it's like a straight away thing, right? So that's the problem about commodities. But if we really look at it in a fundamental point of view, there's a lot of reasons to own PMB Tech. But again, our strategy for this year is more to shorter term thematic plays. So we don't mind, seriously, we don't mind holding. I don't know, me personally, I don't want to hold steel for 6 months. Maybe we have to also, maybe, right? Maybe it could be holding for 3 months or so. But end of the day, we follow earnings. I follow earnings. I follow momentum. Now we're trying to combine it, right, Fata? So that's what I have to say fundamentally. Yeah. And okay, so are we done with commodities? Is there some more that we want to talk about? There's just a quick one. Shit, we got 6 more minutes. Do you have any more?
I plan to go through the other aluminium, but I think it's okay. I mean, the story is
right. The story is the same. Yeah. The story is the same. Correct. The story is the same. We talked about Bursa stocks. We talked about the cushion. We talked about insurance, right? Other than, if you're an let's put scenario. If you're an investor that is really competent on tech, then stick with your tech. But the reality is there's more down simply because, with everything that's happening. So, but how do we earn money on tech? And you can just be trading tech because PEs right now for some EMS players are probably 15, 20. CMACon is 30, 40. But we look at forward PEs. Forward PE is 20, 30. If let's say they reach at that level, then okay, it's attractive because it's Bursa, okay? And that's where, okay, is there should we buy the dip on tech? So my opinion is we should, because seasonality on semiconductor stocks is normally well surfaced in Q3 and Q4. Okay. And that's the way it works. Q1, Q2 is definitely going to be worse, not as good as normal. Q1, obviously, because of Chinese New Year or whatever. Q1. So my point is, if people ask, should we buy the dip on tech stocks? I would say yes, because that's your competence. Whether we like it or not, Bursa loves tech stocks. There's nothing exciting like a software, Palantir, or Dropbox, right? So, okay, that we can afford to buy the dip, then okay, go ahead. Lah. But we have a lot of room. If you're a hunter of earnings, if you're a hunter of what we talked about just now, then have a try at commodities just to hedge, right? That's the scenario I'm playing out. Lah. Now, think about it, okay? The whole market is re-rating shit heavy, very, very, what's that word? A very vicious re-rate thing, okay? Where now, as we speak, so we are talking about D&O, like D&O forward PE, potentially is at 30x, okay? Can you guys guess how much is Google's PE right now? Yeah, we talk about PE, right? Fundamentals talk PE, talk about forward PE. Google's PE is fucking 23 now. Okay, 23. Yeah. Now let's look at the you guys can have the time and look at the earnings yourself. But you look at the net income, you look at the revenue. Okay, Google is a $1.7 trillion company. 2020 to 2021, they raised 40% growth, and it possibly to go higher also. Right, we are living in a digitization world. Blah blah blah. Their net income grew crazy. Their free cash flow grew crazy, double digits. Okay, PE of 23. Their stock price is going up already, but their earnings catch up. So that's why they got PE of 23. Lo. So sometimes I want to say, like, are we dumb? Like, are we crazy or what? Like, we have a company that is stable, that is growing. Obviously, we can't command a high PE like 40, 50 to gain money because they are way up in the S curve already, right? Stable. But if we are competent in technology and you don't want to waste your time in, buying, Silicon Valley, I don't want to research on plantation, all that, then hedge onto big growth and I'm not talking about Meta, I'm not talking about Facebook because qualitative wise, I'm not really a fan of Facebook anymore. So that's what I'm trying to say. Like, we should look at deals overall, okay? And we're looking at Bursa. I'm looking at Bursa. Okay, there's opportunities for sure. But when I look at US and when all the stock prices are going down, I'm like, shit. Maybe, if your cash allows it, then you can hedge onto these big boys and maybe just lose 5% when all your big growth tech is losing 10% or 15%, right? So yeah, that is one thing I want to say. The second thing is fundamentals work, because for forward PEs, fundamentals work. If you deem that this company is still relevant next year, then why not buy a tranche? But if you have more time, like us, shaking leg at the computer and just looking at commodity prices go up and TA, then maybe try on the commodities that we talked about. So yeah, I think overall I want to say that I agree with the thesis. It makes sense. That's why I feel a little bit more. The reason why people panic is because they don't have, they don't try out or they don't know any opportunities out there, right? Can I say that, fake? Like, they panic because they don't know what to buy with the money that they have. So that's why with my clients, I say the same thing. Maybe we should broaden our horizons and be more competent in different industries. So yeah, that's what I want to say, guys. And it's already 59 minutes. Do we want to answer questions from the board?
Yeah, I think that
Okay.
only two questions. Right? So
yeah,
what do you expect a turnaround? So I think we already discussed that. We're going to talk about buy on dip on tech, right? I mentioned about potential laggard in a possible laggard in our industrial product case. So yeah, we might see a turnaround there, right? Yeah, that is a what question. When question? Not sure. Need to see a signal.
When no one will know when, but the fact is, during wars, if it's not a major war that could lead to a next World War III, then there's a list I think we shared before in our Discord group. There's a list that the days for the market could go down. Let's say this war lasts for 30 days. the days for recovery is like 40 days. I'm talking about the stock market. So 30 days drop, 40 days recover. So technically, if we are buying on a dip, we got 30 days to buy the dip. But again, we don't know when this war will last.
Yeah.
So we can make an educated guess for sure. But why not hedge onto some insurance plays at the same time? Then I give another scenario. Utilities, staples, defensive stocks, other than holding cash, this is possible to go up when the whole market rate, seriously, when in 3 days straight, when the whole market is red, right? You'll see staples, utilities, all green. Why? Because they are, they are defensive. So you as an investor who don't want to think so much, you could also do that just to hedge, right? So that's an option. So to answer Lee's question, obviously when we don't know when, but the facts are in wars there are opportunities. Fundamentally, if it doesn't affect your country, your fundamentals of the stock, then why not buy tranches, right? What do you expect? Like we said, we can't really expect when and what, but there will be opportunities. Okay, so Lee, then Matter, Hibiscus is crude oil producer. I think it is worth to invest compared to the equipment and service provider. Yeah, that's true. So we actually called it out and we traded.
I mean, obviously, when the most the company that will get most benefit is the upstream player,
Yeah. Upstream for sure. So yeah, Hibiscus is one of them, and we talked about US trades as well. But the funny thing, so here's the thing, right? Like we worked out the fundamentals for Devon. Okay, 2021 stabilized oil price was around $70 plus, 75, okay, per barrel, and right now it's already at 100 plus. But how long will this 100 plus be? So we have to take an average price of this, crude oil for this year, and then we try to project out Devon's earnings. So what we worked out was maybe like a 30% increase in net profit, which will bring them to around a 10. Was it 10? I forgot. I think we discussed this yesterday. Like 10, 12 PE. Okay, 10, 12 PE. The question is 10, 12 PE. Is it already priced in? Because we know that the stock price is always pricing shit early, right? So, and the run up is crazy already. ConocoPhillips, Devon, all US, all run up. So, and same similar pattern with Hibiscus also. So the question is it priced in even if it goes to 130, or is it not? But as a no-brainer play and as an insurance cushion play, it doesn't buy these sort of plays versus tech and have cut loss. Do you agree, Fig? Because end of the day, the thesis is still intact. The thesis is still there. The energy is still going up. The war is still happening and it's still climbing. Like one day, it raised up by 6% the US oil. Crazy. So I don't know lah. I deem as yeah.
I think when we play thematic play like this, right? What is more important is the catalyst. So catalyst is what happened in the market, the event in the market, the market colors and whatnot. Even if we really being selective with the fundamental, right? Basically, we cannot make the trade, basically, right? But again, it's trade, not investment. So that's why we mentioned energy. That's why we mentioned commodity play, all this, right? At the end of the day, it's more like catalyst kind of thesis, right? Only few company that really stood out in terms of fundamental, like one of it is Bambi Tech that Warren tell you guys this now. But yeah, right, and some of investor, they probably use the ability to to recognize a good fundamental or not, to see to play a thematic play which is have the best performance. Even though, for example, right, like if all the company inside that sector is a losing company, is a bad company, but which one is the best, right? is probably the counter that we really lah, right? So again, this is catalyst play. We just make educated guess. We look at the signal. We look at what happened. So yeah, right.
True. Then after that, today bad sentiment because nuclear fear. I guess so. Is there a nuclear war?
I think,
but highly doubt there'll be a nuclear war. I mean, shit will go bad. It'll go batshit crazy if there is lah. So,
I think it's collective with also the fear of recession, fear of the inflation, all this. Oh, by the way, next week is inflation report, right?
Next 2 weeks, 15,
15, right?
15 March.
Yeah, that's why we need to. That's why we think we need to put money in a commodity, lah, right?
Correct.
Inflation.
Well, no, I mean, no. So this is why commodities is risky, because let's say inflation suddenly goes down, which I doubt, because there's really something happening. Then then the whole price will go down, and then tech will go up, lah. That's why I don't like commodities. But if it's a thematic play that is 2 months, 3 months, then it's an insurance play anyway, right? It's a cushion. So awesome, guys. Hope you guys got some value out of this. Again, if you're watching this live right now, click #live, say hi. If you're watching a replay, click #replay. Again, just tag us. We'll answer you, or join our Discord group, guys. It's free. Join it there. We can have good discussions there. And I'll see you guys again. Thank you. Good night. Bye.